Hello students, this video is related with cryptocurrencies. First of all, briefly, we will see what are actually cryptocurrencies. They are normally called virtual currencies, and these are the currencies that gives the holder various rights. Through those rights, holder can have any product or services, holder can buy some goods, even holder can have some economic stake in any other entity or any business. Now the question is, if you invest in cryptocurrencies, how we shall deal with those rights? Mainly for the dealing of the rights, we have two main accounting standards. One is related with monetary assets and other is non-monetary assets. The rights which are non-monetary in nature are normally treated under IS 38 intangibles. The rights which are monetary in nature, they are treated under monetary assets. Rest, you know the difference between non-monetary assets and monetary assets. Non-monetary assets are the assets whose value fluctuate substantially over the time. And it is not possible to determine the precise dollar value of the benefits of the asset. And number three, they are not readily convertible into cash. Typical examples: plant, inventory, machines, buildings, land. Their value fluctuate over the time and they are not readily convertible into cash. If you ask a question, what about inventory? Inventory is convertible into receivable, not into cash. And their benefit value fluctuates. And IS 38 deals with non-monetary assets. Some of the intangibles which fall under IS 38 also are non-monetary in nature, like we have a brand. What amount of benefits brand will give, don't know. Their value will fluctuate. Similarly, technology, similarly, goodwill, similar are all of the intangibles under IS 38 are non-monetary in nature. The main thing is that they are not readily convertible into cash. Number two, their value changes. On the other hand, monetary assets, we can determine precisely the dollar value of benefits. Number one. Number two, readily convertible into cash, and they are convertible into fixed or precise amount of the money. Their value does not fluctuate frequently. Deposits, investment accounts, account receivables are some of the examples. Now come to the point. We are talking about cryptocurrencies. So now you understand what is the issue. We have to discuss about the rights. Although cryptocurrencies are not issued by any central bank, they are outside the control of the government. Highly unregulated, decentralized procedures are there. So this is one of the benefit, and this is one of the reason why cryptocurrencies are so much popular, because anyone can bypass such kind of regulations imposed by the government if he or the business wants to deal with the cryptocurrency. And I told you that cryptocurrency such as bitcoins can be used to purchase some goods and services. Some of the countries, not on the country level, but some of the companies definitely are accepting the cryptocurrency as a mode of the payment. Then their market value is quite volatile. I told you the reason of their popularity is that investor wants to earn short-term returns. And due to this speculation, their value fluctuates a lot. Now, this is the indicator that these assets are not monetary because their value are fluctuating. So one indicator moves towards non-monetary asset. Then cryptocurrencies are readily convertible into cash? Question mark. Yes, if they are convertible, then we can say, but if not, then it is question mark, non-monetary. And most importantly, can they qualify for cash and cash equivalent? I have another video on cash and cash equivalent. We can see the only those investments whose value does not fluctuate or whose value are not subject to any kind of significant risk are only part of cash equivalents. But here, investment in cryptocurrencies are at significant risk. Next point, how should we treat it? If we invest in cryptocurrency, have we acquired equity stake in another entity? No, because none of the company is basically giving the control on the basis of cryptocurrency. So this means that these are not financial asset as per IAS 32. But as I told you, if there are certain currencies in which you have the rights to convert them into cash, then they will be. So read the question properly. So majority of the indicators points us that cryptocurrency, like the other currency, is not a monetary asset. It is not a monetary item. It is non-monetary item. So most relevant or most applicable accounting standard that appears to be here is IAS 38. Now this means that we decided that cryptocurrencies falls under IAS 38. Now the next question is which measurement model we should follow, cost model or revaluation model? Definitely their value is so much volatile, so revaluation model is most likely be appropriate. But the problem is that IAS 38 revaluation gains are reportable in other comprehensive income. Now this is the contradiction. Majority of the fluctuation in the fair values is in the short term, and the short term gains or losses on the investment are mainly dealt under IFRS 9 financial instruments. So still there is a gap here. Okay, means that majority of investment in cryptocurrencies, they are basically in short term, and we record them in fair values. But on the whole, if you see, until now we are saying cryptocurrencies fall under IAS 38 and we should apply the principles of IAS 38 on it. Okay.